There we go. Let's go get it on a Tuesday, everybody. How you doing? Right out of the gate, let's get to it. Markets went up, markets went down. Now we're back. What's going on here? What's this all about? Are we taking out June lows, June levels now? Are we pausing? What's the deal? Got to get right to it because this is a really critical spot for the markets. We say that quite often depending on what the situation is. But for the major markets, where we are right now sitting parked right on the 886, the June 88.6% retracement is cause for concern. Take a quick look. Here's NASDAQ. We measure it from the June low on the weekly up to that August peak, 15th. 886 is 11,372. Now, I want to talk a little bit today about price action and harmonic patterns. That's the critical, really first step in analyzing anything. We can measure our levels, measure simple retracements like what we're looking at here at the 886. That usually means that's the last ditch retracement. You can't hold an 886. You're going to go much deeper. It all starts with some kind of counter price action that especially where we are in this market environment, you need to see individual price bars before anything changes. I talked about that yesterday with interest rates, and same with the market. So big shout out to the chat. What's going on, everybody? Welcome back. We're here Monday, Tuesday, and Thursday, 12 noon, except for on Thursday. Will not be here. I will be traveling to Las Vegas, and then Saturday we will have the big in-person live with an audience live stream with Mitch Ray. And Mitch Ray, check out Mitch Ray. Go over to Mitch Ray TA, and let me pop him up and make sure you're over there. Let me get, here's Mitch Race. And most of you know where Mitch is, but again, here's Mitch Ray's page. Mitch Ray, and he and I are going to do, I think, is going to be a marathon stream. It's going to probably be an everything stream, a drinking stream, a party stream, a serious stream, but we're going to make it fun. So get on that. Yeah, thanks everybody about the hurricane. You know, we're getting a lot of rain down here in Miami. It's going to miss us, miss the East Coast. It'll probably hit that West Coast, Miami. It's a big storm, but I'm not too concerned about it. People that live down here in Miami, you know, when it's once in a very long while that people that live in Florida really get concerned about hurricanes. They're just big storms with lots of wind. So no worries down here. We're all good. Hey, internet's still alive, hasn't gone out yet, knock on wood. And my power is not a problem. So let's get with that. Here's the other thing. What's that noise? 1 second. I got some things going on just when I said there was no problems. There you go. Appreciate it. The Vegas stream is going to be quite an event. So, you know, if you can't attend and you're not coming, check us out here. Go to Mitch Ray's page. I need to ask those guys if we can do it both on my page and his page. It shouldn't be a problem, but maybe there'll be a technical difficulty. I don't know. And again, get to harmonictrader.com and become a basic member. A few questions on these other HPC Pro platforms. Most of everyone, yes, you're getting it right get with the TradingView program, send your username to hpc at sr-analyst.com. But just take a look at the MetaTrader. I think that's probably best. There's a lot of currency traders in here as well, where the MetaTrader platform is excellent for currencies, really easy to get to the data. Crypto too. Check out that page. Okay, absolutely. Sure. You know, we'll be taking comments on that live stream, Victoria. Victoria's saying, I'd love to hear about the merge, how the merge will act into the markets, crypto markets. I think the initial response on the merge was fairly negative, sell the news kind of an event, which is what we were talking about. But now what? Markets rolling over. Markets are now hitting the lows of the day. They just went negative after being up. S&P was up 50. NASDAQ was up 180. They've all gone negative. How you doing on that? Right back down. Let's look at those traditional markets quickly. Here, we're right back down. Here's today's action on the 5-minute chart, folks. Okay. Just, is that bullish behavior? No. What did we have down here? Oh, take a look. It was a type 2 bat. Amazing. Right on the 5-minute chart. These 5-minute patterns have been really solid lately. I have been noticing that. Perfect type 1 reaction. Come back for the retest type 2. And there's target 2 at 74. You're now at 91. 11,374 was the minimum there. Still, take note, no HSI. No bullish HSI yet on that 5-minute pattern for what's going on right now. So here we go. Another day and just a little 5-minute perspective, folks. There's your low. Okay, yesterday's low was the lowest point you have been since June. That's 11,230. And what is this going to do? Is another nosedive off of that 5-minute bat pattern? Again, perspective helps, especially in this environment. The only number you really care about is the 886 off of that June low. And as I've said, okay, we take out this June low, that's the bam, that's the bat that triggers the second leg. No doubt. Maybe it takes another week. Although I would really think we would crack that 886 this week and start the larger breakdown at 11,372 is that 886. And if you look at your indicators, take a look. Nothing close, nothing even close to registering an oversold. So stick with that whole return, the retest of the June levels. That's still happening. And here we go. Now down 40 on NASDAQ. Nice 200-point whipsaw. But again, the daily levels of 11,848. Okay, you're not rebounding. You're not doing anything. That's your last ditch move. Again, if this whole pattern, what did I do? What did I do? I just moved. Hold on. Here we go. 1 second. There you go. If this crab pattern is going to yield anything, and I mean more substantial than just a pause, a dud, you have to turn around. You have to have one bullish candle daily and bullish candle on the weekly. Don't forget, we're into the end of the month. So the next stream that I'll do will be the 1st of October. And we're going to get some ugly monthly candles, weekly. Across the board, you got weekly, monthly, quarterly, whole bunch of stuff that longer term, this is an ugly way to finish up the end of all of these time periods, especially the monthly and the quarterly. You're finishing at lows. Okay, here's the monthly candle. Let me clean up all the lines here. Let's just look at the simple price action. All right, this is the thing to look for by Friday. A close under that low, which is, what's that, 11,075? A close by Friday, about 200 points then from where we are, would then seal this deal, that this whole consolidation zone that started, I would say you can go back to May, because that does create a nice box range, sideways box range. What does that mean? Just a pause. And where does it go? Following the pause, lower within the predominant trend. Can't deny it. Let's just read the price action, and then what's the corresponding result of a second leg. It's just simple A, B, C, D dynamics. That's why that failure from 2 weeks ago was so critical. And the test of everything, the beginning of September, tested, sideways, dud, failure. Now what? Kick it up to the higher time frame and let this thing just fall out of bed. That's where we are. And you need, again, all patterns are structures, okay? They're just measured, connect the dot structures. But unless you have one candle that agrees with what that pattern, anticipated pattern reaction should be, if you can't even get that, then you're dealing with something that's just, it's a non-starter. There's really, if you're anticipating something at that June level and you can't even give us, you can't flash a weekly bullish candle, which looks like that. There's the weekly chart. Pretty remarkable stuff. Down 6 out of 7 weeks into a major retest. And again, there's nothing here on that weekly retest that says it's constructive by any way. There's no retracement pattern here. All issues. And it's difficult to kind of project it forward to see how far it can go. But I, again, continue to say that this is the BAM breakdown point. Once you break that down, you kick into that second leg, and that second leg is substantially lower. As we said yesterday, the other chart you want to watch combined with all of this, Bitcoin dropping like a rock, the 2-year yield. Here, where are we going? 2-year yield. There you go, 431. Wow, and that's an amazing movement. I mean, I can't underestimate how dramatic. Even this is a 1-minute chart on the 2-year yield. Look at those moving rates. Just remarkable. That's amazing volatility and no stopping it. We said this yesterday. Okay, straight up. I mean, that's just amazing expansion, breakout action that maybe we're hitting. We said some kind of 1618, 2.0 major extension, but here's the problem with that. What's your B point? We can all agree that's a W formation. The B point looks like it's at a 786. So that would really set us up for what should have been a butterfly, which is right there. And that's a failed breakout. Failed butterfly. Type 1 failure, by the way, around 365 and just continuing higher. You assume that will keep running until HSI can get out. Looks like it's trying to. But the bigger story, I feel, is look at what your RSI is doing. You're extremely overbought, but expanding. That's a few more days. A few more days at a minimum, and we could still just have a brief reaction and not even affect the longer term trend, which looks like this. So your weekly charts are even stronger. Okay, in the overbought zone. More, I hate to say this, but yeah, more time. That's going to spell more time in the predominant trend until you can get some kind of inflection. Remembering that's a weekly chart where you're 1-2 weeks away and you're threatening prior lows on doing this. None of that spells any relief for the current situation. Predominant trends remain intact until that changes. And I think you need to get out of this month. So forget this month, forget September, and hope that you can get into October and do some kind of capitulation washout. That seems to be what is adding up here, what's coming together with, nothing happening with rates. And we went through a whole bunch of markets yesterday of why we thought with the breakdown and with the larger targets where this cycle has turned to. And then until commodities come down further, interest rates go higher and hit some higher targets, and these markets, equity markets, continue to drop, you got nothing. And even today, we come into today, started this morning, fairly bullish. Now down 70. NASDAQ. S&P, same deal. S&P actually, that was the one that failed yesterday, took out the June lows, and you're there. 3640 is right there. That is the exact low. Is there anything, like, forget the rest of the world, okay? Forget everything, every other market. Let's just treat this as just a simple example of how we would analyze this formation. And we do have 4 of the 5 points where there's the X to A leg, there's A to B. You came up with your C point. There's the BAM setting up for now to come back down. And that's why, however this closes in this area here, okay, is going to tell us how quickly we're going to realize the second half of that leg. I think you got to close under that 3640 by Friday, maybe get under the 3600 level. Then people are going to start to reach for much larger levels because everyone's looking to the left of the chart. All the fundamental guys are, any earnings analysis and macro analysis will do you very little good when you're trying to figure out where this thing's going to bottom. And I've said this before. The closer scenario, the smaller scenario is some kind of nominal test, even if you took out that prior low, but you would have to do so pivot instantaneously. The 50% level of the COVID rally, meaning there's your COVID low up to the high, 50% level, even on a little dip down, 3490, still 150 lower on the S&P. None of this points to an end, a cessation of what started really in January, but now with this next leg down, if August is going to be, this is your top there, August 15, and this is the start of the second leg, well, then you just do an ABCD and look at that minimum ABCD for areas of potential downside. For me, I'll respect the BAM, and I will target the bad action magnet move on the weekly with a close under that 3640, and I just will park my butt and say, sorry, I won't even touch this. I'm not going back in on any long-term anything until 2475. That's what the software is lining up for us, folks. That's why you get the software. That's why you follow the M&W framework, where if someone came to you and said, hey, I think it's a good opportunity to put money in the market, what do the Harmonics say? Harmonics are saying you're very close to on that edge of starting a second leg. That's the BAM. Absolutely. That's right, David. Dave and Miss Stephanie. Hey, Miss Stephanie, how are you? Juggy is saying, looks like the S&P is going to touch the 200 weekly moving average. Sure. Before any type of relief, probably. We need a washout with this S&P deal. You need something like, look at the quarterly chart on S&P futures. This is going to give you even more perspective of the ugliness. All right, we're not only following a nasty quarter, okay? Third quarter is about to close. There's the second quarter, which was the real devastation going in here. But what do we have? Follow through. You tried to rally it back up. Now you just close underneath that low. Again, 3640, 3639 to be exact, was last quarter's low. You're 3 days out from the end of the quarter, and you're testing it again. And you'd have to rally, you'd have to rally 130, 140 points to even turn bullish on the quarter. So not really the kind of position where you would think, all right, maybe this is 1-2 quarters of a nominal correction, and then we can start turning around. This quarter, it made the attempt, but the fact that it made the attempt and failed, okay, this big wick action came all the way up to 4,200 and then just got slammed. Tells you that the sellers are all contained within last quarter's bar, and you're now into a quarter over quarter decline. So you can start moving stops from, if you're thinking longer term, where maybe prior stop was there, next prior stop is pretty much there, and then we'll get into the next quarter's candle where it's probably even like there, 3750, 3800, where we really don't see much of a penetration above the prior quarter's open. Keep an eye on it. Keep an eye on these quarterly and monthly charts. So many of the long-term patterns have been showing us how severe of a down move this has been, that what's the obvious high to low? You know, there's your COVID low. Again, even if I'm looking at this on the quarterly chart, I would say, oh, probably minimum 50 level. But we know this already has put in the M formation of 4 of the 5 points for the larger bat phenomenon, that even if you wanted to wait till there, again, shoot the gap 34.85. Once you break 34.85, no one on the street or anywhere else is going to have any reason to try to argue a bullish case under that 50% level, because everyone is looking at that 50% correction level for some kind of potential retest, retracement that might be worthy enough of a full correction, but not there. It's not there. The relative position of everything we're looking at, the M's, the W's, the confirmations, are not lining up to basically give us this scenario. The daily, go back again. Here's the thing on the daily with S&P futures. We do have, let me bring this up. We had this deep crab that marked the low back all the way back in June, 37.35. We're well below that. Where do we go from here? The obvious retest point would be on a type 2 would be the hop level at 35.46. And that, for me, 36.49 right now doesn't mean a lot against this deep crab pattern. Pretty clear, reaction up to target 2. And with the bat pattern comes, this one did that tricky, remember, type 1, bang, type 2, now all the way down with non-confirmation. This retest of the deep crab on the futures has to have HSI confirmation. And look where you are. You are entering the zone, but not quite there yet. And if we have a hop level at 35.46, do you really think this stuff is going to hold? No. Someone's asking about the fancy software. The fancy software is the Harmonic Pattern Collection. So I'll use that as a segue. Again, everything that we do, okay, is based off of the automated levels. Why? Because all of those automated levels that we have programmed have distinct constraints, limitations that help remove ambiguity, give you a standardized method of identification, and then, of course, spend a little time working with it. You see how the type 1 reaction, type 2 reversal unfold. And if we're at this point with such a decline and we're in the zone with an obvious hop level, I'm more about looking at this hop level with confirmation to take shape down here before I would even consider it. And today's, up in the morning, down in the afternoon situation is just another sign of this trend. It's not going to give it up anytime soon. Appreciate that though. Absolutely. This is, this is, you would hope, again, waiting for price action to come down. Not even anything to concern yourself with in terms of any potential change until we get at least 1 day, a 3-day turnaround, something. And this is in a free fall. 35.46 is the target for the move. You're going to want to hope this thing gets to a hop level and stabilize. Do something. Let's look at the big stocks, the Microsoft and Apple rundown. Where are they in their zones? Because these are the two most important of everything. And look, Microsoft, we called this out a few days ago when it first hit the zone at 241. And much like S&P futures and a lot of these charts, type 1 reaction into August, type 2 return into the zone on a retest of the crab. I need confirmation here. And look at your indicators. Okay, oversold still. Here's HSI on Microsoft. All right, take a look at what it's doing today. I mean, you are languishing in the zone. You tried to pop above the zero and you're rolling back down. My guess is 220, and I mean now. 220 in a heartbeat. Maybe by Friday, that's 15 lower. It's absolutely a serial continuation. It has been, meaning bar over bar since August. Really no progress to the upside. And you would still, because it's a type 2, with Microsoft, this story is not going to change until this thing can get out of the zone. And we just went back into the zone like that. You would need to do something. You need to do like that and then come out. Not happening. Standard RSI for Microsoft, I think this is also critical, has rolled back into the zone. That's a rare event for standard RSI. I don't even have amplified on the chart. But a rare event to roll back over and expand like that. Keep an eye on that one. That's how we know that the price action, okay, that you're seeing, the continued day over day series of lower lows, lower highs. And in this case, when you're going with the trend, you want to make lower lows. Usually you get some kind of thrust retest and you might get a nominal new high. When you're going with the predominant trend and it's a downtrend, we're looking for lower lows. That's the key to kind of enforce that weakness. If we were an uptrend, okay, we'd really want to focus on higher highs, making that progress. This, no. Today, ugly. It's another example of where we are. No relief. Not, if you're looking for that October turnaround on a major stock like Microsoft, I would just target the hop. Especially like S&P, target the hop. That's 35.50. Not 36.40 where we are. And then Apple, I feel like this could happen. One bad day could give us a huge flush down to there. Apple still hanging at the 150 mark. Nothing changes. Still 131 is the retest of the 1618. All right, it's not lining up. Hey, if Apple was down here at 131 and was about to register some kind of oversold reading on HSI, I would say, okay, maybe that's worth a shot where you have the futures and you have S&P and you have NASDAQ and Microsoft, a couple of the big boys all set to go. But no, not there. The other one that I still think is a sell, and it's real volatile, is Tesla. And that was up big earlier and rolled over. And you've got this deep crab pattern that actually did a type 2 5 days ago. Real tough. No confirmation up there, but this is what it is. This smaller pattern, 272, came back, to 311, and then now we're in. This is where knowing, okay, is it the first time or second time the pattern's tested? Everyone can say that. Everyone knows it's the second time. And did we hit target 1 on the first test? We did. So when it comes back and rolls over, we know that that's a type 2. We're targeting, we go for target 2 on those secondary reversals. That's it. And here's, HSI back in the oversold, but nowhere near. I mean, that needs more time. Take a look at the last time on Microsoft, and I feel like this is, again, why we wait for HSI to come out of the zone. This one just slid sideways and expanded lower, okay, into the zone. And it hit the zone while it was still bearish. I mean, it hit a bullish zone while it was still bearish, but we did not get really anything until you fully got out of the zone over here. Same deal here. We just starting. That kind of expansion, let's see if Tesla starts breaking down again and you break under yesterday's low, that should be the flush point down to 248, go well back to 250, and I'm gonna stick to this. Look, Tesla's it is a beautiful stock. It's a beautiful idea, no doubt. And you got the fanboys. I get it. But where's the real opportunity? On the retest of the big weekly pattern. And until I see that with Tesla, no thanks. I will wait for that retest. And give it to me in an ideal fashion with confirmation. But that's all the way at 208. That's 70 lower. I'm not there yet. I'm not there yet. Just be patient with it. It's taking its time. Maybe it's holding up there in a last gasp effort. But when you see the major markets doing what they're doing and about to break down, it's not really a stretch for Tesla to come back and do the natural type 2 return that in most cases we typically see. If we're going to confirm that inflection as support, you need to come back down one more time. 208. 208. Let's shoot over to the other platform. Let's get to crypto, Bitcoin, and others. But Bitcoin's interesting. Okay. And Bitcoin trying to confound people left and right because it's supposed to be failing. It's supposed to be taking out the 18,000 low, and 18,000, that is the mark. Listen, we have this small bullish pattern on Bitcoin, little shark pattern that popped up a few days ago. We've talked about this. You're gonna see more consolidation in this rather tight zone as it works its way to do the 1-2 on the shark. So just to highlight this, I would love to see Bitcoin in a much stronger position than it is, but the fact that we got a shark, a small pattern within the big zone, is something I'm going to respect and not be surprised to see a type 1 move up to 21,741 and then come back down for the retest. Does this little pattern give us something sooner or later? I would still treat it the same way. Go reaction, come back, reversal, and look for this point maybe in a few weeks. At this point, it's probably the best thing you can hope for on Bitcoin is just simply set the floor here at 18, 20,000 and go sideways for a couple months. It would set it up where you'd have a 2 of 2 pattern and against the big crab. Remember, big crab. Not surprised. Big crab, all of that 16188, it's at 21, 168, 170. But with this smaller pattern now, it gives it a second chance, if you will. But mini reaction off of this immediate low for now, okay. But that's all it is. Just a simple reaction to 21,741. Binance Coin, check this out. Really trying to not go down to 256 here. Trying to hold these levels. Again, the lows are more important when you're in the uptrend or trying to start a new uptrend. Yeah, you want to hold prior lows. If you're going to do some kind of return phase, you need to be holding the multi-day lows. So, bump the stops. If you're looking for Binance Coin to do anything, well, instead of holding 257, now it's got to hold 270. Bitcoin just jumped 5%, and you think we're going up more? LOL. No. What I'm saying is that Bitcoin is in a type 1 reaction. That's all. Think reaction. Think reversal. Okay? Yeah, if it went up 5% off of the shark, great. There it is. But the reason why is because we're assigning the framework. That's how we know to navigate within all of this craziness. And if you got a little 5% pop off the zone, great. That's a start. Even any of the pattern, no matter what this would be, what market instrument, what have you, you're at the shark completion. We're always going for type 1. If that's 10% higher, 14% higher, whatever it is. Okay? That's the direction of where we are within this larger gyration zone. That's all it is. I mean, this zigzag stuff from June, it's just a lot of consolidation of the big crab pattern. Now you've got a little mini-me pattern inside of that zone. And hey, again, just trying to give insight of what that continued consolidation might look like. It might be something like that. 1, 2, and then maybe down. Who the hell knows? But where you are right now, it explains the little micro bounce. Does it mean anything? No, it does not mean anything. We are still in reaction environment across the board. Nothing's changed. Talk about reaction. Got to talk about Ethereum. Because Ethereum hasn't changed either. So ever since that alternate bat and the small pattern inside the big pattern, okay, couple things. You have retested the XA level. We talked about that yesterday of the crab. Is that enough? No. Sorry, bat pattern. This is a crab. Oh, is it a bat? I thought it was a crab. Here we go with these stupid differences in the data feed. We've been talking about a crab for a long time. Okay, 1280, 1230, doesn't matter. This is again, another BAM scenario where we do have an M formation on this retest. And this is one of the few that actually does have some kind of construction on the retest. Pretty important. You do have an M formation. And I'll just connect dots. Let me remove all this stuff. So what do we see here? Initial thrust reaction, great. On the retest here, we have the makings of an X, A, B right there at a 50%, C point at a 618, back down, triggers your 886. That's right at 1,000. And this is how we know. There's your B point. That's the BAM, bat action magnet move breakdown. We talked about that in the last couple of BAM presentations in the past week. But this still remains the objective, even with today's up move. Okay, maybe we come up, kiss against that 1400 level, but we're still shooting this segment down for Ethereum. So maybe Bitcoin does some sideways action while Ethereum grinds lower. But nothing there yet to suggest you have another pattern or another signal that says, okay, what started back in August is over. It's not. In fact, down to 1,000 is the point. Oh, some people did ask me, so let me show you that. Really quick, folks. They asked me about where to read about BAM. Go to Basic Members page, please. And it's in volume 2. I showed this yesterday just to highlight because I know there's a lot of material there. Volume 2 is the place to check out for confirmation strategies with the whole RSI BAM scenario. Also covers the BAT and 5.0. Sorry, 5.0 and the Shark in this book. The BAM material, the indicator material, RSI, second half of the book, chapter 5, chapter 6, really critical because it shows you the things that I differentiate, the way that I look at this could be any indicator structure as well. I used and started with relative strength. You can use amplified. You can look at other corresponding indicators with the W and M complex versus impulsive formation. But we're trying to line this up with patterns like this. 2 tests, initial complex, retest with an impulsive. And when you get multiple readings on that secondary spot, that's where you have the true confirmation. We're looking for that now, but we don't have it. It's not there. Keep an eye on all of that, but take a look at the second half of the volume 2 material. That goes through all of the BAM, just the BAM ideas with the indicators. And here is, there you go. Let's go back to even the BAM structure itself. It's, I call it a harmonic breakout or breakdown. It has like a magnet effect, and it, is principally started with the bat pattern. So let me show you the illustration. Looks like this. There you go. So if we're bullish, we get 4 of the 5 points and we shoot it up. In the current situation with all of the markets we're looking at this type of deal. And that's where we are on the weekly basis. I've been saying this. I think it's important. Just go right out of the book. Show there's a model framework to that whole BAM strategy. When you get 4 of the 5 points, we play for the trigger down to 886. And I've showed this before. Some of these larger charts, I showed that euro just the other day, where you get the obvious formations to come together. And remember, it's still going to take time. I mean, this chart on the euro, let me blow it up. All right, this was triggered on a weekly basis. You failed your B point all the way back in May. That's 2005. It took you a few months, that's weekly, maybe 3 more months before you fully got down there and tested the 886. That's just like the S&P where we are now. All right, and Ethereum. Let me go back to the Ethereum chart. Ethereum is like this. Failed the B point, 4 of the 5. Okay, get down to the 886. Then we would have a smaller pattern that confirms the larger zone, like some of these that we have seen, where for Ethereum, retest the 1,000 level. And I won't waver from that. Ever since we broke down 1,500, I'm absolutely staying with that. And I'll wait for that. I'll wait for that as a structural trigger signal until we get that to develop. And today's action, again, look, 5-minute charts showing it intraday. It's just ugly. Ugly rollover. 1390, 1400. Smack it right back down. Someone asked me to look at the stocks, the crypto stocks yesterday, and Mara and Riot. I mean, let's just go to your daily, weekly. I think we looked at this a little while ago. Here's Mara. And just on the most recent run from June lows at about 5, that made it up more than a triple, 18. But this too has got the whole BAM, bat action magnet move coming together. You've got 4 of the 5 points. Let's start from right there from June July 5th, up to the initial peak. Now, B point, where is that? That would be more like a 618, very close to a 618. So we'll treat that as a Gartley, but where's the ABCD? Because that's the other thing to consider with all of these BAM projections is that your A to B segment has to at least on the second leg be an equivalent move. You need a simple A, B, C, D off of that top to come together with your other numbers, or you don't have a retracement pattern. We should see that in Ethereum with some kind of minimum ABCD, and we should see that on several of them. That if on the weekly, if they trigger, let's say the weekly triggers on S&P, well, we're going to need an ABCD, which is much lower. I'll circle back to show you what those minimums look like. But for Mara, you got to come back and retest June levels. And even you're trading 962, you know, that's 671. Here's MicroStrategy. How are we feeling about Michael Saylor these days? Here you go, weekly chart. This is a long time ago I looked at this. Just another all-time 886 coming together. And still there, we actually registered a weekly bearish HSI about 4 or 5 weeks ago. But the 886 is right there off of 235, off the COVID low. You're already at that 886. What's the all-time? Is that all-time? Here's all-time. Let's go to the monthly chart, all-time. There you go. Looking for areas, not seeing much, but just so you get an idea of where that 886 retracement is. With a lot of these, that's how much damage they have faced. Right at the low. 147 is the all-time 886 for MicroStrategy. Let that come back for a retest, minimum. That does not show us anything. Does not show us anything. So keep an eye on that. A whole bunch. Final one. Take a quick look. Riot's the other one. Didn't bounce nearly as much as Mara did or MicroStrategy, but nothing there. Got to come back down. There you go. Yeah, we're showing a crab pattern on Riot blockchain. Right back trying to have some check back around 650 area. But this is where price action comes into play. I'm not doing anything on that. It's a beautiful, beautiful pattern. I mean, no doubt. There's a whole bunch of stuff going on here. Yeah, big Gartley off of that top crab pattern. You know, generally $10 general area. We should have seen some stabilization. You got nothing. So until the daily re-registers, here it is. Yeah, it's coming back up. Your last HSI on this was a bearish reading. So again, another spot here where you got to just sit on the sidelines. If you're looking for a long entry here, you're just going to have to wait. You're going to have to wait until you get that super cherry setup of another trigger lower. This is just not, it's not where you want things to come together. And again, I'm looking at a lot of things to set up to retest these prior lows and register some kind of major confirmation that's not coming together yet. A tough one. Just let Harmonic Trader members know, premium members. I posted a new 3 ideas for the week, so do check that out. I want to show an idea from a couple weeks ago that is a follow-up, something I can share with everybody. This is this mosaic. And I talked about this recently, and now it's really coming together where there was a 3 ideas way back in July. Got a great move up to target 1, and I actually got out of that a little bit early around 55, but it got just smacked down off of target 1. And now all the way back down, almost at the terminal bar off of that shark. And we're waiting for maybe another retest, but has to come back down. HSI has to register. This is an example of a lot of markets that set up a real nice pattern back in June, gave you perfect type 1 dynamics, just like Microsoft, just like Tesla. And now they're coming back down. We need to line up where the structural markets, structural support for this market, for a lot of the markets, where's that going to come into play? We know it has to hit those numbers and it has to retest June levels, and then it has to give us confirmation. And until you get those two events, you're going to just let this thing fall into that zone. No doubt. And Mosaic looked great. I mean, it looked like one of the ones that, hey, maybe it'll hold up here in the 52, 53, went sideways and failed. I mean, 45 is the number. You're almost there. 47. One or two more that are real close. No, not that one. Let's do. Here's SAP. Okay, look, I've been looking for confirmation on SAP. This is a weekly chart. No, it's a daily chart. Weekly chart, I think, is CRM, workforce. Crab pattern down here. It's still type 1. But look what happened just in the last 4 weeks, 5 weeks. Registered a bullish zone down at 82. Quick hop, and then you got another bearish HSI. So step aside on this one. This was something as a 3 ideas I was looking for down here in this 82 area. It got a trigger and then got smacked right back down with another bearish HSI. An example of being a very frustrating situation, but we utilize HSI as the guide when we're down this low. That's an ideal trigger, but when you run right into a bearish counter HSI, you got to respect it. And this has happened twice. We did the same thing back in July, and then right again, HSI. Look at the zones. Look at the indicator window. From there to there, the move is over. Okay? There to there, move is over. Now, do we get one more shot on SAP? Massive pattern. All depends on if it can hold. So maybe next week, we'll look for HSI to roll out. It's going to be in this zone for another 2 or 3 days. And look at the E here. The E on the chart means earnings, folks. Most of you probably know that. That's only 3 weeks away. Maybe 4. Call it 4. All right, this is positioning self for whatever these earnings are going to do. Does not look like there's any trigger to get long on that bullish pattern just yet. And you took maybe 1 or 2 shots. Could have done that. Duds. All duds. That's it. David V. Yes. Okay, we'll jump back over to crypto because we are looking for what. Here's Sandbox. Sandbox, another one. Big pattern into smaller pattern. All right. I'm not crazy about crypto at the moment because of the things that Ethereum and Bitcoin are doing or not doing. But at least we have a smaller pattern inside the larger zone. But it has to hold this 83 level. Take a look. Everything boils down to this small bat. And can you hold this small bat pattern? The big bat that initially completed back in June, sideways harmonic dud. Here's your next chance, but that's it. Can you at least get a type 1 off of XA up to target 1 and then maybe come back down? You should see a reaction. I mean, isolate any pattern like this. You should be able to get at least one reaction off of that low. I'm watching it. It's a good one. I'm glad you brought that up. But again, no confirmation here. Gonna need more time. It's you would love to see that. These big patterns, a whole bunch of them, but they're not triggering. A lot of these are not giving you the signals you need to see, especially on such deep retests. And again, this brings me to other things that we've seen. Things like Roku. Unbelievable. I saw Kathy Wood on CNBC this morning talking about how she's been buying Roku on the way down. Really? I mean, she's been buying Roku and holding it since last year. Tell me what's the basis on that chart? I mean, that's Roku was 450, 470. Incredible. 480. Now $58. And there's no signal here. ABCD, okay, but what's the last HSI? And that's a question I always ask myself coming in on any chart. What's the last HSI? Bearish. Hop at 58.55 off of that small pattern. That might be something, but there's nothing to really sink my teeth into. And if I'm looking at the whole history of this asset, it's like this. Give me the 886 at this point, right? Where's that? Right there. 886 is $70. What's it doing at $70? Not much, breaking down. So I'm confounded why someone like her would continue to buy this with this kind of collapse. To me, what's to stop this from going down? You break under 58. Let's say you close under 58 today on Roku. What's the price action telling you? I mean, we still follow, and this has followed type 1, type 2 behavior. Look at this, when we're here on the ABCD completion and it goes to target 1, not a surprise. We're still not surprised when it comes back for the retest. That's the 1-2 dynamic, but what's it doing on the retest? It's failing. And I would say under 58, that thing is completely failed. And there's really not much to go on. So really surprising. I don't know. Let's take a look at her ARK Invest. Long term. We know we had this big bat pattern. Harmonic dud going sideways on the weekly. Yeah, until we get the next bullish HSI in the zone, there's nothing to even look at here. It's a real treacherous spot because you want to believe that something that has come in and given up 85% of its all-time market cap has got to be a buy somewhere soon. But no. And when we overlay patterns and the hop works out where it's not negative, it's not surprising to have to start thinking about a hop at 1442. You're 37.65. Okay, but we have spent since, what was that, May? Yeah, right there. Completed in May. You're 22 weeks out, and you're lower than you were 20 weeks ago. All of that says to me, especially with confirmation not in your favor, continuing lower. I mean, there's not a lot of signs here that are showing us across the board. You look at the major markets. Look at NASDAQ. Look at today. Let's go back to that. Go back to today's action. NASDAQ. You're supposed to hold 11,500, 11,800. You're at 11,270 now. And then you have a day like this. All right, this is today's action. And it's a beautiful bat. I mean, that bat pattern basically sealed the deal at 9.55 today. But you're up, trying to get off a low, and then you roll right back down, and that's your low for the move. You tell me. It's all about the price action. I think anybody that's going to look at technicals, you're going to start with individual price bar behavior. Everyone does. Then you go to metrics and you go to measurements and trends and divergences and other indicators. But the singular price action that we're seeing here, if it's intraday time frame, if it's daily time frame, all of that telling us this stuff is still, when it's selling hard. When it's hitting bullish levels that are supposed to stabilize it, it slices right through. It's a harmonic dud. And that can be one of the most difficult reads of all. But when it's not clear or you're not getting a response rate, you kick it up to your higher time frame. For us, that should be weekly. And everyone should be focusing on just this week's candle and last week's candle. Because a close under this week's candle, which is, or last week's candle, which is 11,230, and a close under that June low, it's it. The second leg, you just write it into the book. Yeah, the book. There you go. Thank you, David. Oh yeah, that's a great chapter. Chapter 4 in volume 2. That's another one that I could spend a whole session on. Harmonic patterns relative to the trend. And maybe I'll save that for Monday, because again, there's a lot of things that developed back in August and September. These little micro patterns that came together. Remember those? Where is it? There you go, on the daily. And so David brought up this situation. It is on the basic members page. You go to volume 2. And what we're talking about are respecting the trend and respecting even the smallest of patterns that are inside that trend. So go to volume 2. And what he's saying is go to chapter 4. Where's that? 6. There it is. 4. And you're looking for stuff like this. Okay, looking for each point in the trend. And when you get patterns that are in that trend, here you go. Something like, or that's a bullish trend. Bearish trend. Let's look at that quickly. Come on back. There you go. Stuff like this. And this is what we've had recently. We had things that looked like they were going to give us a reaction and flushed all the way back down. Looks like this. All right. You've got an established trend and then you form a retracement pattern and it yields a larger move. That's what all of those small patterns are now about to do. They're all about to give you these massive continuations halfway through an established trend. And you see that here's the SPY. Again, I think that's probably the best of all. That one was a little tricky because you had that whipsaw 1-2 type 1, type 2 action. But even within this downtrend, and let's just trace it out. Clear downtrend like that against the bearish pattern. We've been talking about the return phase to at least retest all of those June levels. Well, for SPY under 358.90, you're done. You're done. And a lot of those are pointing lower. Remember, S&P futures, again, on your daily chart, has that, like a lot of them, has this crab pattern. And so real concrete things going on. But you have to fully retest that crab. And the fact it's preceded by a bearish bat pattern tells you this has got more to go down. This is a pretty strong point. And I think we're going to have to just target hop 35.46, that mid 35.50 area. If you want to know where this whole thing is going to fall apart, it's under these levels on the failure of that retest. This is what our message the last many sessions. Come back, retest June levels. Not even June lows, June levels. What's it doing at those levels? It's failing. No confirmation, no turnaround, no individual response. All right, last chance is 35.46. As we see market rollover even more. S&P down 25 NASDAQ down 60, flirting with the lows of the day. And that's, you're just going to have to ride that. For everybody that's utilizing the software, this is the one thing you want to focus on. Harmonic Strength Index. Yes, you can look at standard RSI, which is already oversold, but that doesn't help you until that comes out of the zone. And HSI is telling us there's still more work to do on the downside, which I think the way that's coming together and really setting up 35.46, folks, and that could happen by Friday. That's 100 and what lower? That's 100 lower from current levels by Friday. Come into the zone and then pop back out. And it could even happen by Thursday. You know, we're in a flush. We are in a flush, and the last 5-6 days prove it to us that we're in the flush. We're 6 days down, maybe 7-8 days in a row down. Usually you don't get more than 8 days down in a row. Very, very unusual to even have 7 or 8 days down in a row. But let's look for that into Thursday. So I'll see. Look, Saturday's the big day. Saturday at around 5 o'clock, I think we start. But I'll have an update for everybody. If you're not going to make it to Vegas, please tune in. It's going to be a wild, fun time, no matter what the markets do. But it's pretty clear. Harmonic framework is pointing us to do these deep retests, if not take out the lows across the board, and then set the second leg in motion. We'll talk about that on Saturday for sure. So appreciate it. Thanks, everybody. Again, get your trial over at harmonictrader.com. That's where it all begins, and it's all free. Until then, if you have any questions, get on the Discord. Contact Miss Stephanie. Thanks, everybody. I'll see you on Saturday. Have a great one. As always, go get them.